Hi, I'm Rod Lloyd, Managing Director of Low Cost Vans, and I'm sat with Ross Davis, our General Manager, and we are going to discuss personal contract purchase. Personal contract purchase is commonly referred to as PCP, and it is one of the most popular methods of funding vehicles in the UK today. So Ross, how does it work?
Well, Rogers, basically it comes down to three main things. The first thing that comes down to is how much do you want to pay up front, and that would be called your initial payment. Typically, your initial payment would be normally around 10% of the car's value. However, it can be as much as you want up to a maximum the lender would allow, and it can be as low as one monthly payment up front. You may even get deposit contributions and things like that from the introducer on certain vehicles, depending on the offers that are available.
Okay, that seems really straightforward to me. So moving on from there, what happens next?
Well, the second thing is your actual monthly repayment that you're going to pay. It's based on how much value that car will lose over the term of the contract they're going to do, based on the mileage that you're going to do as well over that period of time, plus any interest applied by the lender.
Yes.
If you choose to pay more up front, that means you would then have a slightly lower monthly payment. Conversely, if you pay slightly less up front, your monthly payment then could be slightly higher.
You mentioned mileage there, so going back to that a second, do we need to tell the lender up front how much mileage we're going to do?
It's very important on a personal contract purchase to stipulate the mileage that you're going to do from the start of the contract and the mileage you anticipate to finish the agreement with. The reason why that is the third part of the agreement.
This seems to be where some problems have occurred in the past. So what happens at the end of the agreement?
Well, fundamentally you have three options, okay? So you reach the end of the contract and you have three options there what you can do. The first thing you could do is to part exchange the vehicle. You could part exchange it back to the person you bought the car from, you could go to somebody else, okay? What would then happen is the car would obviously be valued based on the mileage it's actually done and the condition it's actually in. Anything that your car is worth above the guaranteed minimum future value would be yours to keep. You can then use that as a down payment on any other finance product that you were looking for, on any other car that you were looking for. Okay, so that would be your first option.
Yeah.
The second option is you can just hand the vehicle back. So you could say, I don't want to get a new car, I physically just want to hand this car back and I'm going to go and buy a used car, I'm going to get something else, I don't need a car anymore.
Okay, so I can walk away without any liability, provided I've kept the vehicle.
That's exactly right, you can walk away without any liability, provided you have not exceeded the agreed mileage and the car is within the fair wear and tear guidelines. If you have exceeded the mileage, excess mileage charges will be applicable, and if the car is deemed to be above the wear and tear, then that damage would be chargeable. Now the third option is that you can choose to own the car. You know what the guaranteed minimum future value is, because that's set in stone at the start of the contract. You can choose to pay that yourself. So you could say, yeah, I really like the car, it's been a fabulous car for us, I'm going to buy that car. On paying that payment, the car then will become yours. Okay, the reason why personal contract purchase has been so popular is that it does give the customer a lower monthly payment traditionally than on a standard loan agreement because of the guaranteed minimum future value of the vehicle.
Is that what I've heard referred to as a balloon?
That is what you've been heard incorrectly, I might add, as a balloon payment. Okay, it should be called the guaranteed minimum future value. Basically, the lender at the end of the contract says the car that you are driving with the mileage you have done has a minimum value of X. If the car has done more mileage than you said you would do, or is in a condition outside what they would class as fair wear and tear of that car of that age and mileage, then additional charges could apply. But that guaranteed minimum future value is the funder saying this car will be worth this amount at that point in time with that mileage on it.
This is, having read the papers recently, there seems to be quite a lot of negativity about this product. Why is that?
Personal contract purchase is a fantastic product. It's designed to run the contract, Rod, which is the important thing. If you think about all the flexibility the customer has, that's all at the end of the contract. What I think has happened is the pressure from manufacturers to constantly sell as many cars as possible. They're all driven to try and get as much market share as possible, and this drive to constantly overproduce cars. There is a pressure to perhaps go back to customers who are midway through a PCP or midway through an agreement and say, Mr. Lloyd, would you like to change your car that you've got for a new car? and that sometimes can create a problem. The point that customer is in, if they haven't gone the full course, they may be in negative equity on the car. Then what some unscrupulous people may do is roll that negative equity onto the next car, which the customer might not be aware of.
Okay, and I suppose if they are coming out with a similar monthly payment, they probably wouldn't even ask the question. I think what we're saying is that PCP is a fantastic product that makes vehicles really affordable, but the consumer needs to be aware of some of the pitfalls later on in the agreement.
The main thing you need to be aware of is if you do hand the car back, the car will be inspected, okay? It's not just a get out of jail free card, right? And that is important, you know. You are expected to look after that car, and that's an important thing to consider when considering, is this product right for you?
Really appreciate your time. Thanks, Ross. We have written some fact sheets on this product, which are available on our website, www.lowcostvans.co.uk. Thank you.